Welcome back, everyone, to the latest installment of the Borak series. We're finally going to all our other offices in the region. Today, we are going to speak to Sonija, our Maybank Investment Bank's MIB Hong Kong's head of research, to basically speak about Hong Kong and basically what the market is talking about currently. Hi, Sonija, welcome to the show.
Yes, thanks for having me today.
Okay, Sonija, let's dive right into it. Hong Kong stocks were the talk of the town back in 2021, soaring to new heights. And at that time, I think there was a lot of good feelings. But fast forward to today, it's looking at Hong Kong has taken a bit of a 180 and has basically weakened. What's happening in Hong Kong, Sonija, and why is the market facing such turbulence?
And I think the market actually experienced quite serious weakness now, especially this year. And the reasons are mainly due to China. And actually, we can raise out several reasons that are for the decline. One is for the concern of the China property crisis. As we saw that actually some of the property developer started to default, especially for their offshore debt, and so that it raised concern of the China property crisis especially this year, and also for the weakened renminbi. And I think these two reasons is that for the China and also for the overseas investor, they don't have the confidence towards to the China economic growth. Although we saw that for the recent GDP growth for this year, not this year, but for the first Q this year, actually is better than expected. But we can see that there's a growth momentum going forward. And so that even for our houses, we believe that for the next year of GDP, we forecast around 4.4% GDP growth. And so that we saw because for the market are worried about for the economic outlook, and also there will be a potential worsening in the China property sector. So that we observe there is a capital outflow, especially for recent 2 months. And for some market channel chats suggest that actually for month to date, and there's this record US dollar 1.6 billion capital outflow, especially for the Chinese company. And less than 2 months, it was already 5 billion US dollar capital outflow from, especially for the Chinese tech company. For example, the well-known name Tencent, Alibaba, JD.com, etc. And so that we observe that not only they concerned about for the outlook in China, but also their investment decision is started to shift and from China, Hong Kong to maybe go back to the US, and also for the US, there's something like this. And so that we will consider those as the major reason for the decline in the Hong Kong stock market.
Okay, so just to recap, it seems that the main culprit behind this overall market weakness is the uncertainty stemming from the property sector. Now, given that the most Hong Kong stocks have taken a hit, could this be an opportunity for savvy investors out there to snag some bargains? I mean, looking at the valuations, clearly there must be some stocks that are still fundamentally strong. And now the big question, Sonija, are there any stocks out there that you think might have been oversold? Clearly there's a lot, and it could be shining stars basically for some to pick up on for the long haul. Can you share with us your basically your one or two of your top picks here so that investors should keep an eye on?
Oh, okay, sure. I think now the consumer is not willing to spend on the property, but it doesn't mean that they don't want to spend. And so that we can see from some latest Chinese economic data is that especially for the retail sales, for the latest month is around 5.5% year-on-year growth, which is beat consensus expected of around 4.9%. So actually, it means that actually for the Chinese, they still want to spend, but not on the property, but on maybe on their consumption and also for the travel. So that we want to highlight is that we are positive on two sectors. One is for the Macau gaming, and other one is the China travel related company. And for the upcoming catalyst, we can look at for the Double 11 festival. This is a quite traditional and online sales festival in China. So that we hope that can be a catalyst towards to the China consumer sector. But why are still positive on the Macau gaming, but rather than the consumer sector, is that we observe that for the Chinese, they are not only want to spend on the China consumption, but they really want to travel. We can wisdom that from the latest Golden Week period. And for the Golden Week holiday, actually for the Macau, they already welcome more than 930,000 visitor arrival during the period. So it actually implying for the daily visitation of more than 120,000. It is much higher than the Macau official forecast of 100,000. So we also think that for the valuation wise, for the Macau gaming sector, now they are only trading around 10.5 times forward EV over EBITDA. That is around one standard deviation below is their historical mean. So that we believe that for the upcoming, let's say Christmas and also for the Lunar New Year, Macau is expected to welcome more visiting arrival in the 4Q and also for the first Q next year. This is also will be a catalyst to the sector as well. And so that we highlight two stocks on this sector. One is for the Sands China. This company, we believe that it will benefit for its large hotel inventory. And also this company have a very large exposure on the mass market. So we think that for the visiting arrival continues to grow, the company will directly benefit. And other company is the MGM China. And worth to highlight that MGM China is the only casino operator that should be granted around 200 gaming table when we knew the gaming license in the latest term. And so that we believe that MGM China have a story of the market share gainer, especially this year and also next year. And also valuation wise, MGM China is only trading around 8 times forward EV over EBITDA. So actually it is below for its inventory mean, and also is a historical mean more than one standard deviation below. And so that for these two companies we want to highlight. And other company that I want to highlight is Trip.com. As I said that actually we saw a very strong rebound in the domestic demand. And during for the Golden Week period, for the domestic travel already exists for the pre-COVID level. But the international outbound demand actually is only half, and this is because for the flight capacity did not reach over 15%. So that if the airline company, they started to rise up for their international and also regional flight capacity, we believe that the outbound demand will continue to grow. So that we highlight this one of the largest online platform trade, Trip.com, to our investor.
Okay, so again, just to quickly recap for the benefit of our audience, basically it's Macau Gaming. So the two names are Sands China as well as MGM, as well as Trip.com, basically looking at the consumer spending, especially during the Golden Week timing just passed. Okay, fantastic insight, Sonija. Thanks for shedding light on the Hong Kong market situation at the moment. And I'm sure the audience will probably be able to listen in and gain some traction from this information. Well, folks, that's a wrap for today's session. But before we sign off, I promise Sonija that we'll be back soon for her to continue telling us what the last minute gems that we'll probably be looking at in the coming weeks. All right, then, that's a wrap for today. Thanks again for your time, Sonija. Remember, everyone, you can get the latest market news and research from our social media channels. We're available on Telegram, LinkedIn, and YouTube, so be sure to follow us there. If you're interested to find out how you can trade with Maybank, you can also reach out to our sales representative, or apply for an account via Maybank to you using the QR code on screen now. With that, thanks everyone in tuning in today's Borak session. This is Naguib Hussin signing off. Thank you everyone.
Do 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 do.